Market conditions remaining bearish in this bear market, sitting at a neutral trend here of 7 and 7 on S&P futures this morning. Seeing a little bit of an uptick here, 0.37 on the upside. You can see on the 1 hour time frame, attempting a little bit of a support rally potentially here at this demand zone. We're sitting underneath this support area. It's now broken down. I've turned that to red. This demand block, which is now a supply block, looking for a resistance area here. If we can break back up above that 59.09 area and hold that level, we could see some strength in this 1 hour time frame. Is starting to show some bullishness, majority bullish. We look at that pattern here on SPX. I should be focusing on that one, but sometimes this one does show us an insight of what SPX may do that day. Still majority bearish on S&P 500 here, but extended in that downtrend in the shorter term, and in an area where we could get some support bounce just from an oversold condition. We have the S&P 500 stocks above the 50-day moving average, sitting at 23. This is a breadth indicator looking for the participation in the number of stocks participating in that overall rally or sell-off. In this case, it's the sell-off. We've got 23% of stocks above their 50-day moving average, which means 75% are below. And obviously that trend is to the downside, and that is pulling the markets to the downside. So a couple of things can happen here. We can see a continued sell-off down towards that 10 range, which would really put us in that oversold area, or we could start to see some support and a bounce back to the upside. We've seen one little tick here. The really short end of that trend is turned back to bullish. You can see it's moved. We've got 1 in this bullish zone and 13 to the bearish zone. So there may be an indication of some support. Obviously, we're seeing it really hasn't moved a whole lot now for a couple of weeks in that area. VIX also showing bullishness here, but in the 60-minute time frame, this 1 hour time frame starting to pull back. You've got majority bearish now on VIX, which is bullish for the markets here in the short term. SHY, some downside pressure, continuing to see that in bonds as well. Now it's this overall uptrend, this retracement, running into some resistance and being rejected there on the bottom side of that 618. It's trying to grab that other trend. It's going out a little bit too far, going back a year or two. TLT, similar price pattern here, majority bearish to the downside, really getting a expansion of that trend, and in the 1 hour time frame starting to move back up just a little bit, but still a pretty nasty downtrend in bonds. We're seeing that in the yield price. Obviously the 2-year yield, majority bullish at 14, and getting a compressed trend right here and some bullishness to that trend. Also, we'll see if we continue to see that trend advance in the short end of this yield curve, which markets shouldn't be excited about right here. U.S. 10-year Treasury also 4.76. So we're seeing the 2-year and the 10-year 4.35, 4.76, just about the same. So that flat yield curve currently. Let's take a look at the Dow Jones Industrial Average. We've got a pullback into that almost that 50% zone, and we're seeing some potential support locations that could hold up here across the board, around that 415 on DIA. That's the ETF for the Dow Jones Industrial Average. Triple Q's, QQQ, the symbol here, and then the NASDAQ 100 pulling back 494, a potential support range. But we've got majority bearish on the 1 hour and really a neutral trend on triple Qs here as well. So this pullback, this is an area where we could see some buying into this pullback. If this overall bull market is going to continue to advance, that's what we're going to want to see here relatively soon to hold this first range here of that 58.68 range on S&P 500. Let's jump down to Russell. We're seeing continued weakness, majority bearish at 11, but in that 1 hour time frame starting to tick back up a little bit. So as we get these trends that are expanding out and they work back towards contraction and compression, something like this, then these are those expanded ranges that Russell 2000 pattern could start to see that. So again, seeing some potential confirmation for some bullish, at least for some bullishness in the shorter term, potentially on each of those three for markets. USO continuing its nice advance here. Looks like it's going to gap up as well. It also has a really expanded trend now on that 1 hour time frame, from compressed to expanded, and this is where we want to be looking for entry. This is where we want to be looking for management or profit taking, or waiting for a pullback here. USO now really strong trend advancing, and be watching for any kind of pullback here in USO, possibly for continuation of that overall trend and entry on that name. GLD, also gold, holding up here at that 246 range, and also that upper compressed trend, a pretty solid bullish trend in place, and getting some consolidation in the upper end of this trend. The short end of this trend, the 1 hour time frame, also majority bullish right here as well on gold. So gold looking bullish, USO continuing to look quite bullish. Markets as a whole still bearish, but at an area where we could potentially see some support. If we continue to see downside from this location, and we see this overhead supply area, these red zones here start to reject price, we get a test and it rejects it, moving it back lower, then this overall downtrend could continue to be in place. A couple of trade ideas for you today. FARO, nice confirmation bar, increased volume, back into the momentum zone here as well. Nice looking pattern. And Sonic Automotive also had a nice confirmation bar. If you want to get these indicators for your own desktop for trading view, you can just join our Discord room. There's a link in the footer description that you can get signed up and get access to all of the indicators that we are currently utilizing. That'll do it for today's update. Everyone have a fantastic day today.